Hi, this is Alkemy with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 3rd of January 2023. Starting on with the FTSE, which has got off to a flyer, up 2% against all the doom and gloom that we're hit with on a consistent basis. We were looking for the 76.30 area while we were above 74.50, or at least while we're above 74.30, and we've got that. We've got a mini inverted head and shoulders pattern there for December going into January. End of day close above 76.30 should be enough to take us up to a new potential target around 79.20, which is the top of that rising October trend channel. We've had last week a golden cross buy signal between the 50 and 200 day moving averages, and with a bit of a delay, that looks like that's kicking in. We also had a bounce off RSI 50, which tends to be a leading indicator on up moves, and we've also even had a crossover in the MACD indicator as well, which is maybe the reason why we're up so much today. So good news all around. Only back below that 74.30 to 50 area, really delaying the upside scenario, but I think we've done enough consolidation to get to a new upside for this market. Moving on to the DAX, which is also trying to chase the bullishness of the FTSE. Here we're trying to break 14,200 on an end of day close basis. If you can do that, then we're looking at the top of that rising wedge from September as high as 15,100, ideally by the end of this month. This stage only well below the 14,000 level, maybe 13,800 would really delay the upside scenario, but we've got a rising 50-day line there, so that should back this market. And we've also, after a couple of weeks, managed to break above RSI 50, so the RSI now around 55, which is a good sign as well. All that's missing now maybe is for the 200-day line, which is still falling, to start curling upwards, and that would help us at least psychologically. On to the Dow, which ironically is perhaps the laggard of the big three today. Here we've bounced off the uptrend line, the October uptrend line there for the third time, which is good. Still have the risk of a test of the 200-day moving average at 32,400, but at least while we're above that, looking for a retest eventually, maybe sometime later this month, of the 34,600 area, which was December resistance. Moving along to Bitcoin, which is doing what it does best, which is not moving at all, which is probably a relief for most people. Interesting here that we've still got that uptrend line in the RSI window, which gives the current consolidation a slightly positive spin. We're trying to break back above the 50-day moving average, which is around 16,800. If we can do that, the next level up would be 18,500, basically post-summer, the old post-summer support, and retesting December resistance. Below the 16,000 area risk down to 14,000, which is a June support line projection. But if you're cautious, maybe just wait for the RSI to break above neutral 50, it's around 47 at the moment, and to break up above the 50-day moving average on the price chart. Moving on to the stocks, and quite a selection today with the FTSE up 2%. The market's rather bullish, well, there are lots of situations. Starting off with Alkemy, which so far bounced above the floor of that gap there. That was around 231. The low on Friday was 240, so above 231, looking for new leg to the upside, initially up to resistance at around 315, 320. Big picture target maybe over the next 1 to 2 months as high as £4.50, or perhaps, depending on where that line it actually is, the top of that channel actually is even higher, up to £5. But initially 315, 320 the target there, while we hold above 230. If you're cautious, maybe you'd wait for the RSI to break back above neutral 50 in a meaningful way, and we'll see if that happens early this week, or at least for the rest of this week. Onto a stock which normally doesn't get any exposure here, but we've got it today. Applied Graphene Materials, and we've had now 2-3 days above the 50-day moving average, around 7 pence, while we're above 7. Looking for a retest of post-October resistance around 14 or 15 pence, perhaps as soon as the end of this month. We've had also a bullish divergence there to back the push to the upside, and also as one of our favourite setups, the unfilled gap to the upside. That happened on the 28th, so the break of that gap up day was the entry point around 5.6 pence, and we've done well since then. On to a stock which covered in my stocks to watch over the holidays. Here we've got Arrow Exploration with bounce off the floor of that rising trend channel from back in June. We'd like to see an end-of-day close above the 50-day moving average around 18.5. If we can get that, then we should get to 22 pence, hopefully finally by the end of this month. RSI is also pushed above neutral 50, so that's a positive, as is the rising 200-day moving average. Chart that normally fills me with, or a company that normally fills me with trepidation, but it looks as though Challenger Energy has got its act together, breaking above the 50-day moving average after a bear trap back in November. That was around 0.07, and now a comprehensive break of the 200-day moving average at 0.09. That suggests that we're in a rising trend channel from back in June and can hit 0.16 by the end of next month. Ideally, we stay above 0.09. One of the best performers of last year, or at least the latter part of last year, was Critical Metals. And today, a bit like the Alkemy situation, we've had a bear trap rebound. Also, we've filled the gap from the middle of last week at 28 pence. End of day close above 28 pence would be a gap close buy signal and suggests that we're now back on track for a move to the top of that rising September trend channel at 45 pence as soon as the end of next month. There is a line of resistance there from last month around the 30 pence level, so if you're cautious, you wait for an end of day close above that. But we bounced off the RSI 50 level as well, so that's positive, along with the bear trap gap reversal and potential gap close buy signal. Quite a mouthful there. Moving on to Cornish Metals, which I haven't looked up quite a while. It's gapped through that resistance line there from June, so that suggests that the bulls meeting business here above the neckline resistance, which is 15.8 pence from late October, November. We're looking for a target as high as 24 pence by the end of next month, which is a July resistance line projection. So looking pretty ship-shape there for Cornish Metals at the moment. Great RNS from GreenX today, knowing of no reason why the shares should be so high, but charting situation was always suggesting 50 at the top of that rising trend channel from September, and looks like we're going to hit that over the next few days, perhaps. In fact, we could probably now upgrade the upside there for GreenX towards the 55 pence level, given that looks like today's high looks like the top of the channel for the time being. So the view now is that at least while there's no end of day close back below today, the bottom of today's gap at 42 pence, looking for 55 pence by the end of next month, only back below the bottom of the gap there at 37 pence or 36.6, really delaying the upside scenario. Well, what a great chart that has been and still is. On to another stock which has been included here because the charting situation looks so good. Here we started off the rally with an unfilled gap to the upside, and it's been almost plain sailing ever since. Another unfilled gap to through the 200-day moving average last month, and I suppose if we look carefully, it was another gap at the end of last month. So the stock really going great guns here. Above the 160 area, looking for £2, which is a March resistance line projection. If it could be a little higher than that, in fact, but £2 while we remain above 160 on an end of day close seems to be the pattern there for global ports. Genedrive is also looking rather better than it has for a while. Some of the pandemic favourites seem to be coming back into favour. Bullish divergence here going into December. We had the break of the 50-day moving average at the turn of the year, and above that at 10 pence, looking for 16 pence. And perhaps even more, actually. I'd say the top of that triangle there up to 17 or 18. So let's go for 17 or 18 pence while we hold above 10 pence on Genedrive. Moving on to a stock which is a new one to me, which is normally unusual. Here we've got Genincode, and here the shares, not much to say, obviously, apart from the unfilled gap to the upside, which is rather telling. While we remain above the 50-day moving average at 11.5 pence on a mid-close basis, looking for the shares to hit 18 pence. Obviously, most people won't be in this one, but it's always good to know what the map looks like for a runaway move on the upside, or a potential runaway move there. But the 50-day line hopefully coming in with support there. Hvivo is next, one of the stocks to watch. I included over the holiday period. Here we've had an unfilled gap to the upside through the 50-day moving average, and the longer we stay above the floor of the gap there at 10.25, we're looking for another move towards 15 pence which is the top of that post-June broadening triangle. And the RSI also pushing above 50, which is a healthy sign as well. If you're cautious, maybe wait for an end-of-day close above the 200-day moving average at 12 pence before targeting 14 or 15 pence over the course of January. One of the top stocks to watch, in fact, that I classed in the update over the holidays was hydrogen Utopia, obviously going towards the main market very soon. And here we've got a situation where we've got a rising trend channel based at the 13 to 14 pence level. Above that, looking for 22 pence, hopefully as soon as the end of this month. That triangle breakout really did the trick for the bulls of HUI. Moving on to another vertical mover. Here we've got Manx Financial, which has blown the lights out as far as the target we had before, which was 24, 25 pence, or 23, 24 pence, in fact. It could be the case that we managed to stretch up towards 30 pence while there's no end-of-day close back below today's low around 22 pence. So perhaps a little bit more there for Manx Financial on the upside. On to Novacyt, which probably claims the prize as being one of the better movers of the recent past. It was identified basically around the low 70s just last week, and the initial target was £1, and obviously that was easily achieved. Second best case scenario target was to hit that July resistance line projection, which was heading up towards 150, and in fact looks as though we touched that line right on the nose, which is obviously very satisfying. The current view is that while there's no end-of-day close back below the 200-day line at 122, we're looking for a retest of the 155, maybe even 160 area over the course of the rest of January. Finishing off with Oxford Cannabioid, and here we've got a situation where the shares are, after a long time, poking their nose above the 200-day moving average. I don't think they've been above that since back in May last year, so quite a turnaround there. The normal rule is that basically you regard a market as being bullish when it's above the 200-day line and bearish when it's below it, so this could be a turning point. Above 0.85 and the 200-day line, looking for initially up to 0.98, which is the top of that triangle there, or that resistance line there from May, and the top of the triangle from the latter part of May, heading towards 1.3, so above a penny, looking for 1.3 on Oxford Cannabioid. Only back below, well below the 0.8 pence level, really upsetting the apple cart there. That's it from me today. More updates tomorrow.